Really one story today, Julia. Qantas shares in the end sold off very, very heavily, down over 9%. Your thoughts on the market reaction?
We did see Qantas shares finishing on the low. So if I bring up an intraday graph of Qantas and how it traded today, this is what it looks like. A lot of the fall came while we did see the CEO, Alan Joyce, speaking. And I guess it was reconfirmation that we would not be seeing a guidance for the company, and also that its international arm, which was aiming to get back to profitability in FY15, that would no longer be the case. And the international arm, in terms of these results, has been the most disappointing part. We have a look at the international arm. We know that Qantas has been trying to turn around this business, but if we have a look at earnings before interest and tax, it went from a loss of $91 million in the previous corresponding period to widening that loss to $262 million. So it looks like things on the international side getting worse. Of course, a number of challenges for Qantas here. First of all, it is very capital intensive. So looking at the cost of funding and credit costs, I guess it really needs to come back to profit before we do see the debt rating coming back to investment grade. Moody's coming out to reconfirm the negative outlook and the BA1 rating, which is sub-investment grade or junk bond status. So watching that, watching the cost of funds, and then of course the challenges that it has on both the domestic as well as the international side. So hearing a lot of cost cuts today, really designed to cut down on the fixed cost base for Qantas to help it be more competitive. Lots of news to absorb, but unfortunately not a good share price reaction today.
Julia Lee, some, I suppose, concerning commentary and demeanour coming from Alan Joyce. Now, I'm sure others will decide whether or not that is an effort to force the government's hands to try and get what Qantas does indeed want. But talking about the survival of Qantas, I mean, just how dire is it? You look at the amount of cash that they have at the moment, and it doesn't look like it's a short pile of cash at all.
They have a lot of cash, a lot of liquidity, $3 billion worth of liquidity, $2.4 billion worth of cash, and about $600 million worth of undrawn facilities. So it's not about the solvency of Qantas, which is in question here. It's about turning around the business from the loss that we're seeing. Now, they did forecast a loss before tax for the half year between $250 to $300 million. It's coming at $252 million. But I think concerning is the breakdown. You know, we know that the international arm is a concern. They had been trying to turn it around. That's gotten even worse. The domestic unit, which has been the strong stay for Qantas, has deteriorated quite a bit from $218 million in the previous corresponding period to just $57 million this period. So competition from Virgin certainly taking a bite out. We know from the numbers from around about July to October that Virgin has been taking market share in terms of the domestic business, and Jetstar as well. We saw that declining from $218 million previously down to $16 million. So previously we were mostly concerned about the international arm of Qantas, but now it looks like domestically they're coming under a fair bit of pressure as well. So we have international concerns, domestic concerns, and then of course the cost of funding with Qantas's debt rating being sub-investment grade. So looking to address some of those points and reducing the cost base will address the first and the second, or help to address the first and the second points, the domestic and the international business, and hopefully make Qantas a bit more competitive on that world stage as well as here domestically.
For airlines, it's very interesting the day that we had all of these concerns being aired about Qantas. And New Zealand, of course, who does have a sizable stake in Virgin, which we know Alan Joyce not particularly happy about, 40% increase in regards to their profit.
A record half-year number coming through from Air New Zealand, and Air New Zealand's done fantastically throughout the last year. The shares are up 53%. If we have a look at the credit rating of Air New Zealand, it's very different from Qantas, Baa3, and that's because Air New Zealand is 53% owned by the New Zealand government, so it is state-backed. They have a much bigger market share. If we have a look at on domestic routes, it's 85%. On the Trans-Tasman routes, it's 40%. They have alliances in place with both Virgin as well as Singapore Airlines. So with Virgin in terms of most of its domestic business, and of course with Singapore Airlines in terms of the international business, and that seems to be working well. So net profit up by 40%, the dividend up by 50%. We didn't see much of a share price reaction because it was in line with expectations, but the shares have been up 53% over the past year, and that compares to Qantas, which is down about 20%.
We're going to be talking a little bit more about Qantas later on in the show. Rudy Philippek Van Dyke from FN Arena will join us. There was, believe it or not, some other news out today. Indeed, some late news, Julie, in regards to oil search numbers.
Well, we've seen oil search's result being delayed because it has been in a trading halt, and we've finally seen these numbers coming through after market. Now, the trading halt still remains. And we'll have to look at how discounted and how dilutive that capital raising will be. But in terms of the numbers, pretty much coming in line with expectations. We did see production numbers being upgraded to 13 to 16 million barrels of oil equivalent. That's from the previous guidance of 12 to 15 million barrels of oil equivalent, but that looks like it's simply because of a revised conversion factor and some of the new ASX rules, and so just adhering to those rules. But 2013 production was 6.7 million barrels of oil equivalent. So coming in at the upper end of guidance of 6.2 to 6.7 million barrels of oil equivalent. Of course, the Papua New Guinea project, now we're going to start seeing some cash receipts from that particular project over the next year. And that's really what we're going to be watching, because the speculation is that this material acquisition is in that Gulf project in Papua New Guinea, and perhaps we could see some of those cash flows from that Papua New Guinea LNG project being diverted into the Gulf LNG project, that the speculation that this material acquisition could be over.
All right, Julie.